Whereas in this case, we may be talking about a situation where you're going to get a lot of cash in advance and then have 6 to 9 to 12 months to actually provide the service that they're asking about. So if that's your situation, what you want to make sure that you do first and foremost is have a forecast. Hey, y'all, and welcome to the Cash Flow Podcast, where we're going to talk about everything related to the money in your small business. I'm your host, Pam, and without further ado, we're going to jump right into our episode. Hey, it's Pam coming to you from FinCon Live in New Orleans, one of my favorite cities in the world. And we're going to talk to you today about 3 things to do if you have a seasonal cash flow business. All right, so you're one of those businesses where you get a big burst of cash in at one particular time in the year, but then in the rest of the year, you don't necessarily have really positive cash flow. So there are a few things to do, but we're going to focus on the 3 big ones. Okay, the first one is to take a look at your expenses in some detail. Because whereas most businesses, it's kind of really clear which expenses are what we call variable or they move with revenue. So you're going to spend it the minute you get it in order to service the client. Whereas in this case, we may be talking about a situation where you're going to get a lot of cash in advance and then have 6 to 9 to 12 months to actually provide the service that they're asking about. So if that's your situation, what you want to make sure that you do first and foremost is have a forecast. That's really important because you need to understand right at the start when you get, I don't know, let's say $50,000 in cash. And that's a big amount of money, and a lot of things can happen once that goes in your bank account. We all know that the minute money hits our account, it can start to disappear really quickly, at least if you're like me. So what we want to understand is how much of that cash is needed and when in order to very clearly take care of the expenses needed to support that client, right? So the nice thing that you should be able to do with every one of your services is lay out, okay, if I get money here in month 0, what happens in month 1, month 2, month 3, month 4, all the way down to when you've finished delivering that service or product. And that way you can know, okay, I know I have to allocate this much of that money that's going to be spent over the next 6 to 9 to 12 months. Other than that, that's all profit to me, free and clear to spend in my business any way that I want to. So I've seen 2 things happen when people don't do the forecast, the happy one and the sad one. The sad one is that they spend that money right out of the gate. And then they get down to the end of delivering the service and there's no money left to pay what's needed to pay to actually provide that service. So that's the first thing. But the second thing is the other side around. They get paranoid and frozen and they don't spend any of the money. So they're not growing their business. They're not getting other clients. All of those sorts of things that are really required in order to keep a business up and running. So thing number 1, do your forecast. Understand for every service that you offer, when and how you're going to pay for the things to deliver that service. And again, same thing for a product. If you're in the construction industry, for example, and you collect deposits up front, make sure that you know when you're going to have to spend that money. Very easy to draw out on a little piece of paper with just 6 little columns. Make it easy for yourself. 12 columns if it's 12 months. Okay, let's go on. What's the second thing? Look at the labor in your business, right? So you're probably paying people for labor. And in a seasonal business, very often we tend to hire people full time and not necessarily buy or pay for a workforce that's much more flexible to the needs of the business. So if you look at your business and it is very seasonal like that, this is a little bit different than the first example, but the same sort of an issue. Say that you're a landscaping business and you don't do anything in the winter. You're not clearing ice or snow in the winter because you're in the southern part of the country. So you literally get all of your income in between March and October, and you have all your expenses between March and October. I've worked with a couple of landscaping firms who have full-time employees, and during that off season, there's really nothing for them to do. So they're literally paying these folks during the months where there is no revenue. So one of the things that I suggest is that if you are highly variable like that with a big surge in one season, make your labor fit that bill. Now, there are a number of ways to do this. One is to hire contract labor and you pay them by the hour. And therefore, they know during other seasons they have to get other work. They may go north and work for snow clearing, or they may have their own business that they focus on in the winter, something like that. The other way is to have employees and furlough them and then bring them back on and then furlough them. Now, the only thing with that is, as a business leader, that's always a tough thing to do. If it's understood, though, from the beginning that that's what you want to do, and if you use your contacts and your network to help those folks find other employment during their downtime if they need it, then that becomes something that they really treasure from you and sets you apart, quite frankly, from all of the other seasonal business leaders, because most of them really do just 1099 labor. And when there's no work, there's no pay, and that's it. So that's the second thing I would do. The third thing I would do is look to see if there are any other expenses like that in your business that could be more variable than they are fixed. And the kinds of things I'm talking about here is advertising, for example. If you're paying for an outsourced marketing firm to do your marketing for you and you're paying them a fixed amount every month, maybe what you can do is say, hey, we really don't need the advertising during the months of December, January, and February. But boy, we need to double down during February and March, when people are starting to get that spring fever. So you'd look at that advertising expense and say, hey, I don't need this to be year round. I could cut a little cost in the off season. Some other expenses that are like that might be, it could even be memberships and things that you're part of that just kind of lie dormant during the winter or during whatever season you're not making your biggest sales. So those are the three things I would do in that order. The first is really understand how much you're going to have to spend of money that you might collect early and when you're going to have to spend it. Once you know that number, the rest of the money you collect early is yours. You can use it. Go ahead and spend it. The second piece is flex your labor. Find out the best way to flex your labor so that you're not necessarily leaving people out hanging dry when you don't need them, and make yourself the employer of choice. And the third thing is really look through all your expenses to see if there are any others that you're paying for full time that you really could ratchet down and only pay during the season that you're highly active. So that's it. Points 1, 2, and 3 on what to do if you have very seasonal cash flow. Again, this is Pam coming to you live from FinCon, where I love all of the experiences we're having here. Tons of very neat vendors and very interesting talks and podcasts, et cetera, going on here as we speak. So Francis and I are having a great time. Wish you were here and hope you've enjoyed this episode on how to deal with seasonal cash flow. I hope that video was helpful, and I hope you subscribe to my channel for more information on finances in your business.